So good morning, everyone, and welcome to our colleagues online. Welcome to my staff also. Today we need to discuss, or I'm going to discuss, a VAT ruling. So my name is Nico Tron. I'm the Managing Director of Unicus Tax. I studied a little bit of tax. As per usual, this training is intended for the guys in my office. It's for their purposes and for those of you joining online for interest's sake. Right, so guys, let me ask you this. Why is it, and I'm talking to you that's sitting around the boardroom and to our colleagues online, because Mika is making notes frantically, right? Let's just stand back for a second. Why are we looking at VAT rulings? Why are we looking at rulings at all? Because there's another ruling we're going to discuss next week, a binding private ruling on the deductibility of interest. Why do we look at this? It's not like these rulings, if it's not a binding general ruling, it's not like it's binding on us. We can't say, oh, but SARS ruled like that, so we want to rely on that as well. It's not, it doesn't create a precedent. So then the question is, why do we consider them? Well, we consider them because they give us insight into the way SARS looks at a particular set of facts. And I can tell you this, I have applied for rulings in the past where I said to SARS, well, when I look at the rulings in the published version of a ruling, my facts look almost identical. We'll talk a little bit about that in a second. I want a similar ruling, right? Because my facts look the same, my interpretation of the law is the same. Or we might look at the ruling and say, hang on, if these guys applied for it, and we'll talk you through this ruling, if these guys went and applied for this ruling, I'm pretty sure there are other taxpayers who might want to consider applying for this as well, because this is something that would have a bearing not only within this taxpayer, but the trouble you have with rulings is interpreting the things, right? Because these rulings, when they are published on SARS's website, they are sanitized to death, which I understand because they don't want to disclose the parties to the application. And I've done many rulings before, so I know what you see as the published version and what is in the formal written ruling is it's the same conclusion, but it's not nearly as dense on the facts, etc., etc. So when you interpret a ruling, really on its own, if you read it, you will read it and go, so what? You know, certainly with all the rulings, or most of the rulings I read, your kind of first reaction is, what now? What does that mean? But then you start questioning, why did they go for the ruling? What is it that they are trying to achieve? What is it that forced these guys to go for a ruling? And then you start understanding what the bigger picture issue is, and that's when these rulings start making sense. All right, so in this case, we're talking about a VAT apportionment ruling. So pretty straightforward. It deals with this question of, what ratio do you use if you are making mixed supplies, right? So we know for VAT we can make exempt supplies and we can make taxable supplies. And if you're making exempt supplies above the de minimis threshold of 5%, right, then you need to apportion your VAT. Although the first rule is direct attribution. So if you can first say this expense relates to that taxable supply, then you claim the full input tax. Good luck proving to SARS that direct attribution, that can be a fight in its own, but that's the general starting point. Then the fallback position is if you don't have an expense that you can directly attribute to a taxable supply, let's say, for example, an overhead, like I always use the example of an audit fee. You can't allocate the audit fees directly to the making of taxable supplies, right? So you have to apportion it, right? So typical companies that do a lot of that apportionment are banks, because they earn interest, which is an exempt supply, holding companies, in group structures, typically because they get management fees, which are taxable, and then dividends, which are exempt. So these are typical guys that make these mixed supplies, and you can't necessarily always attribute an expense directly to a taxable supply, despite the fact that I've done many tax audits in my life as well. If you speak to the FD, say, I can directly attribute this easily to that taxable supply. And you get to a point when we do what we do, when we defend taxpayers against SARS, it's easy to make an allegation. It's an entirely different thing to prove it. And they always come to the answer, yeah, but SARS must come and prove it. SARS doesn't have to prove it. We have to prove it because we carry the burden of proof. So don't make these sweeping statements, make them, but then we must back them up, right? So we must have the facts. All right. So what method of apportionment do we use? The general approved apportionment method, which all taxpayers must use unless you've applied for a different apportionment ratio, is the turnover-based system, right? So what it says is, it says effectively, when you have an expense that does not directly relate to a taxable supply, you must apportion that input tax on that expense based on the taxable supplies over all revenue, right? So when you look at that formula, which is quite small there, but you can enlarge it, it says A over A plus B plus C times 100 to get you to a percentage, right? And that's your apportionment ratio. That's the taxable ratio, because above the line is your taxable supplies. Below the line is the sum of your taxable supplies plus exempt supplies. And then C is always the kicker, because C is everything else that's not included in A and B. And you might say, but what does that include? That includes things like dividends, because dividends is not an exempt supply, it's a non-supply, in fact. And we can get very technical, that can get very technical very quickly. But the point is when you determine A plus B plus C, you can take into account the value of taxable supplies, the value of exempt supplies, and then all other income. And that's the apportionment ratio you use unless you apply for a different ruling. And in fact, what the legislation says is it says you must use the standard method that's approved, unless the standard method gives results that are unfair, regardless of which way it goes, right? So if you use the turnover method and SARS thinks that results in too much input tax being allowed, they're going to say, but that's not a fair result. That's not the scheme of the Act doesn't envisage that sort of apportionment ratio. Then you must apply for a different one. So the days, and this has been a rule for many, many years, is people used to think, you know what, I'll just do the turnover one because then I know I'm safe. You have to actually test whether the turnover apportionment ratio is a fair and equitable, or gives results that are fair and equitable. You can't just rely on it and be safe, right? So you have to continuously test. Right, so these guys obviously went and tested, whoever did the ruling, we don't know who it is, but they went and they said, okay, fine, we want a different apportionment rulings. And I've seen many different types of apportionment rulings, floor space-based, transactions process-based. There are all sorts of interesting rulings. This is the first time I've seen one like this. So let me just give some background to what this taxpayer does, right? And it is quite crucial to understand this. So the taxpayer, we don't know. The facts are vague on purpose because the SARS sanitizes and stuff. So the taxpayer is in the home retail industry. And they sell goods via online platforms, but they have showrooms across the country. You can only buy online though. And already when I'm saying that, I'm sure there's a bunch of people in the room and also those online going, oh, I wonder who it might be, right? But anyway, so we don't know who it is. It sells goods on credit and therefore earns interest as well as initiation fees. So you can see where this is going. These guys are making taxable supplies on the sale of home retail, I would imagine furniture or something of the sort, right? So they make taxable supplies of goods. They earn interest on the credit, which is an exempt supply. They earn initiation fees and service fees, right, on the creation of the credit because they sell on loan. And so that's a taxable supply. And then what they do crucially is they sell their debtors. Right? And that, by the way, is a transfer of a debt security, which is a financial service, which is exempt. Right? So look at their income streams from a VAT perspective. They've got taxable supplies and exempt supplies. So clearly they're making mixed supplies. And then they went to SARS and they said, I want a ruling. And SARS says, okay, I'll give you two types of apportionments based on the types of costs you incur. Right? So there's one set of costs that they incur that relate, and of course the ruling is vague, and I'm not being vague, the ruling is vague. Right? So there's one cost center that this business has that clearly relates exclusively almost to marketing and advertising costs, right? So they have expenses that goes into that. And so SARS says, what I'm going to approve for you in the alternative to the turnover-based method in relation to those costs only is I'm going to allow you to use a page space-based apportionment method. Right? And I can see the frowns on Paul's face and everybody else's face, because I also went, what is that, when I first read it. So what it effectively is they say, take the portion, look at the page space area, and take the portion of the page that you use to advertise your credit terms, and the other portion that you use to advertise your taxable supplies, and use that ratio as an apportionment ratio for this cost center. It's interesting, right? I see how we were going. So remember, this is very difficult because ultimately what you're trying to do is you're trying to get to a fair amount or fair allocation of the extent to which you are making exempts. So you can imagine that I have a cost. Let's say I incur, let's use the simple example of a leaflet, right? Is that the right word? Leaflet, where you advertise things on, right? There will be, you can buy the couch and you can buy this and you can buy this, and 99% of the page is that, and 99% of your cost goes towards that outlay and those pictures and those spaces on the page. And then there's a small corner at the bottom here that says, oh, by the way, we allow credit terms, we can earn interest. A turnover-based apportionment to determine to what extent you can claim input tax is not fair and equitable. And so obviously in the circumstances, they reckon that a page-based space apportionment is more fair and equitable, and SARS approved it. But that's only in relation to one of its expenses. For the rest of it, for the rest of the expenses it incurs, SARS effectively says you can use what we call, that's commonly referred to in the industry as a varied turnover-based method. So in other words, they are changing one of the elements in the standard turnover apportionment basis slightly. So you'll recall the standard turnover method is A over A plus B plus C, which we said earlier, right? Where A was taxable supplies and B is exempt supplies and C is all other income. So they say you must use this one, the one that we all know, the turnover-based method, for all your other expenses that are not related to that specific cost center. This is okay? But in relation to B, for exempt supplies, include only, right, and this is interesting, include only this in relation to the sale of book debts. Because remember, if you sell a book debt, let's say the thing is worth 100 Rand and you sell it at a discount of 80 bucks. That 80 Rand you receive is for an exempt supply, right? So it says when you determine B in the formula, in relation to the amounts you receive on the sale of book debts, only include this, not the full value of the book debt, the following, include only the following. It says, start by determining the difference between prime and JIBAR, which is the interbank lending rate. Now let's call that X, right? And it says multiply the proceeds on the sale of the book debts by X, let's call that Y, and it says for B, use only Y, insofar as your proceeds, insofar as it relates to the proceeds on the sale of book debts, right? Why? Why would SARS rule something like this? When you read it the first time, you go, well, that seems like super arbitrary. You know, why? The ruling is a bit poorly drafted with respect to the drafters, because it can read as if you must add this in addition to the sale of book debts, but I don't think that's the way they meant it to read. So it says, in the place of B, use only this percentage of the face value of the book debt, this percentage being the difference between prime and JIBAR. Why are they doing this? They don't explain this in the ruling, and this is where the value lies in interpreting rulings. If you just stop there, when you interpret a ruling, you're going to learn very little, right, if anything. We must ask the question, why? Think about this for a second, and I'm, of course, now interpreting the ruling based on what I understand. I don't know if this was the intention, all right? When you sell furniture, say for argument's sake, on credit, and you charge interest, you will have a debtor, and the debtor will have capitalized interest on it, right? So let's say it's 100 plus capitalized interest of 50. So when you sell that book debt, it's got a face value of 50. You're going to sell it at a discount rate because nobody's going to buy it at face value, right? You're going to sell it at a discount rate, and you're going to get some of that money up front. But if you, in the formula B, you add the interest on the 50 Rand in your apportionment in the past, and then when you sell it at what is inclusive of interest already previously included in the apportionment basis. Does that make sense? Are you guys following? Hey? Paul? You're making sense. So now the basic premise, as far as I can tell, is the idea with this apportionment ruling is to say, well, we don't want you to suffer the VAT knock on your apportionment twice. Once when you incur the interest, when it goes into B, normally, and then again when it's part of the selling price. What they want to include is effectively only the future interest, not the interest you've already incurred. And the future interest in the circumstances of this case is how they've determined, or the proxy for the future interest is determined as prime less JIBAR, right? What probably happened in this case is, to get to that answer, they probably knew, the guys who did the ruling, and so they probably told SARS that I lend out at prime, and typically the purchaser, typically if it's a bank, or depending on if they know who the purchaser is and how the purchaser discounts the rates, they probably know it's JIBAR. That's why they can say that the difference between prime and JIBAR is going to be the future interest on this, right? But you might stop there and ask, okay, fine. So I get the concept, right, of kind of excluding and not double counting the interest, but the seller still has to include this future interest, because it says include this portion of the future interest. But it's never going to earn it. Nee? The buyer's going to earn it. So why do we have to apportion for it at all? Why not say we must adjust B to exclude entirely the proceeds on the sale? Right? The trouble with that thinking, and it's a normal kind of way for us tax people to go, is because that's an income tax mentality. That is not concerned with the link necessarily between income and expenses. It's concerned with consumption. And when the seller of this book debt incurred the expenses on which it claimed the VAT, that is final or consumption for something that will always generate exempt supplies. So whether you earn the interest or whether it's future interest, we must include in your apportionment. Also, by the way, the seller won't be able to claim any, or the purchaser won't claim anything on it because it's a fully exempt supply, right? So that's my thinking. Now, that's at least my interpretation of this. Now, I can tell you that there's lots of people out there who sell book debts, right, who sell their debtors, right? And if you don't have a similar type of ruling, you are potentially effectively suffering the VAT apportionment knock twice. Because in your case, you don't have adjusted B in the formula. You just have the full face value of the sale, right? And so the question is, why then, if that's the case, why then is this a binding private VAT ruling? Why isn't this a general VAT ruling to say those who sell book debts? The trouble is this future interest is probably very fact specific here because they use prime less JIBAR, right? There might be the future interest in another transaction might look different depending on the interest rate they charge, depending on the discount methodology and discount rate used by the purchaser. It will be very difficult to say, well, we must always do prime and JIBAR because I'm sure there are instances where that will now yield unfair results, right? So in my view is if you've got a taxpayer who sells book debts regularly or fairly regularly, one might consider the effect of something like this, because it could be a substantial saving if you're allowed to claim more input tax because your apportionment ratio is more favorable, right? Much more so. Right? So that's something to consider for guys who are effectively taking the double knock, as it were. Right. Guys, that's for today's session. It is intended to be short. I can cover the next week's ruling, but that's not the point of these sessions. We have got stuff to do. Do you have questions on this ruling? Do you see how one must, when you look at a ruling, it's pointless to just read the thing, right? You'll learn nothing. You have to ask, and what I've found over the years of looking at binding private rulings is, if you ask the question why, first place, why are they applying for this ruling? Because in a VAT ruling, okay, obviously yeah, it's to get a VAT apportionment, but why did SARS rule in the way it did? If you just leave it, you'll go, well, it means nothing to me. But now that we understand, or we deduce what we think the purpose of the ruling is, we can make sense of it. And we can go to our clients or go into a dispute, for example, and say, but this is effectively double counting of it. That's not the purpose of Section 17, right? And how many are there out there? And that's the point of rulings, by the way. How many taxpayers are there out there that are effectively suffering the input tax knock twice because they use the standard turnover-based apportionment method when clearly SARS is saying, well, we'll allow something else fact-dependent, right? And by the way, that is the purpose of rulings. When you look at the Tax Administration Act, why we have at least the advanced tax ruling system, and yes, one can debate whether or not VAT rulings, it is an advanced tax ruling effectively by virtue of the link in the VAT Act to the part of the TIA that deals with rulings. But the purpose of rulings is to create clarity and certainty on the interpretation of tax law. That's its purpose, right? But then I've said this before on record is, unless you have someone like us or like me to interpret the ruling, it does nothing of the sort. It doesn't create clarity. It doesn't create certainty. In fact, what it does most of the time is people come to me and say, what does this mean? You know, what does this ruling mean? And so really it takes a little bit of interpretation to come to something that's useful that you can use. Questions? I'll go to my staff first, or those in the room and not joining online because of flus and stuff. It's not even winter yet. We're going to get that soon. Right, so before I go to the chats, there seems to be nobody here that has a question. Everywhere? The page-based apportionment thing's still bugging you? Okay.
This is fair price, right?
This is?
Fair price.
Fair price?
Yeah.
No, how do you mean?
No, you said they sell furniture online.
I don't know who the taxpayer is. I don't know who it is. I mean, we can deduce it, I suppose, but really neither here nor there. All right, so if you've got questions, the guys are joining online. If you've got questions, you can either put them in the chat box or you can just raise your hand and unmute yourself and fire away if there are any questions. Very unique situation. I appreciate that. So it's not something that is... Right. Ahmed, go ahead. Please go ahead.
Good day, can you hear me?
Yes, I can.
When a ruling is issued, do you have to apply for that ruling as well, meaning you can't just apply it to your taxpayer, to your client?
Correct. You have to go and apply for it, right? So the ruling is issued by SARS for this taxpayer, and it's only binding on SARS in relation to this person who applied for the ruling. You can't say, as a taxpayer or for a client of yours, say you can apply this apportionment method because SARS has approved it. Insofar as your client or you are concerned, they've done nothing of the sort. If you want something similar, you have to do a formal ruling application to SARS, which is strictly regulated by Section 41B and the Tax Administration Act as to what must go in there and what they want. So you must apply for it. But like I said, I have on more than one occasion gone to SARS and said, listen, I have read this ruling of yours. As far as I can tell, my facts are identical and I want a similar ruling. And then if it turns out your facts are similar, then in my experience, they will grant you a similar ruling. Remember, they don't publish. So, for example, I've done one or two rulings where I said, listen, my client's facts look the same. I want a similar ruling. They'll issue it, but they won't necessarily publish it again because there is a published version of that ruling already. They're not publishing it again. So there could be that this is the only published version and there are 10 other guys who've applied for similar rulings that they've issued. But if they haven't issued one to you or to your client, you can't rely on it. You have to use the standard turnover-based method, and that thing is fraught with issues, but we all know that. I mean, it's not something unique. We all know that the standard turnover-based method is a bit of a headache. Does that answer your question, Ahmed?
Yes, it does. So generally, so if you have a case where you find that a ruling could apply to your client and give them a better tax position, do you tell them we need to start applying now and this is the costs, and like what would be the way forward? What do you tell the client?
Yeah, so I suppose the approach to the client would be is, look, there is this ruling. Let's explore whether or not we think we can get a similar ruling. So let's run the numbers. Because remember, with a ruling application, there's often a misconception with people who have not necessarily gone through this process before, is they think you tell SARS what your facts are and you say to them, can I get a ruling similar to this one? Or you give them the facts and you say, can you tell me what the tax consequences are? That's not at all how it works. What you're supposed to do is you're supposed to express a formal view, right? And say, this is my facts, or these are my facts, this is my interpretation of the law, this is my conclusion, and this is why it's justified, and that you send to SARS together with all the annexes and supporting documents, and then they'll say, yes, we agree, or no, we don't. So you go through this formal process of effectively expressing a view, in your case, if it's a VAT apportionment, giving them the numbers, giving them the ratios, and showing them and proving that it's just and equitable, and they will then look at it and say, yes, that's okay. But it is, unfortunately or fortunately, it tends to be, depending on the ruling you want, it tends to be a fairly expensive exercise. VAT rulings, unless it's an advanced tax ruling, SARS doesn't charge for. But advanced tax rulings, like the one we're going to discuss next week, like a binding private ruling, that is something that they charge a fee for, in addition to the guy that you are paying to prepare the application. So it does tend to lean towards the more expensive spectrum, if you will, in terms of the fee for the client. But in my view, I'm very fond of rulings because although I'm more than happy to express an opinion, and this is not necessarily in the case of a VAT apportionment ruling, but in the context of, let's say, the deductibility of interest, which we're going to discuss next week, I'm more than happy to say to the client, well, in my opinion, if I interpret the tax law, which is effectively what you're doing when you're applying for a ruling anyway, you're just doing an opinion and sending it to SARS to vet, effectively, whether they agree. But I'm more than happy to express an opinion. The trouble with opinions, although they serve their purpose very well and they have their place, is everybody has one, right? And in any matter where there was a dispute between the taxpayer and SARS, there were two opinions, one for SARS and one for the taxpayer, and one ultimately turned out was wrong, right? And so when you go through the ruling process, which is rather a process, and yes, it is expensive, it is a way to create certainty. An opinion only gives you the view of one person, and that person says, I'll defend this in court if it has to go there, right? Which is great and very useful. But then the ruling gives you certainty. Right? And the trouble that you have, I'm going to just put in context of a practice, of an accounting or a legal practice, whatever your practice is I've done many of these before, and when you go to a client and say to them, I want to go and tell SARS about my transaction and ask them what the law is, all of them go, nope, 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 they're just going to audit me and they're just going to hit me with a stick. Of course, they're going to rule in their favor. Why would they rule against their own pockets? In my experience, the rulings division in SARS consists of very competent people who are not auditors. They're not chasing targets. They have to apply the law and come to the right conclusion in law, not the conclusion that benefits their pockets. And in fact, there was one memorable ruling where I applied for confirmation on whether or not a certain transaction qualified for the zero rate. It was an 11.2L issue. And I was convinced that there was local consumption, despite the fact that the service was rendered to a non-resident. And there was a strategic reason behind applying because the customer, the client was being difficult. So we said, well, let's get a ruling. And I was convinced they're going to rule the standard rate applies because I think that was the right conclusion. I argued for the zero rate, but the facts were there for them to conclude it's standard rated, and they came back and they said it's zero rated. It almost fell off my chair. I remember calling the SARS officer saying, how did you get to this conclusion? And that conversation I will not repeat here, right? So you would think that it's not hostile. It's not a confrontational exercise. Well, some people make it a confrontational exercise, right? It doesn't have to be. You're expressing a view, you're giving it to SARS, and you have a debate with them about it and see whether you can agree on what the correct interpretation is. And if they want to issue an adverse ruling, you can withdraw your application. Right? So it's a very, very useful tool to mitigate tax exposure, to get certainty. In fact, it's the only tool, short of getting a declarator from the High Court on the correct interpretation, which people have done. Res Publica, I think, is one that comes to mind, which is a VAT issue. Short of getting a declarator, a ruling is probably one of the most efficient ways to get absolute certainty, if that's what you're looking for. And no, it is not a question of, oh, if I give SARS this, they're going to hit me with a stick. And I have found, and I know this is not necessarily a question of it, but you've raised this point, or this thinking point in my mind, is rulings are very useful in general. I've also found them to be useful when you are dealing with, for example, an entity where there are plenty of stakeholders. A good example, and the thing we discussed last week, is homeowners associations and body corporates. You've got everybody in there has an opinion. And that guy knows that guy who knows that guy who thinks they know everything about tax, and then you keep on fighting with each other. I say, well, let's break the tie, let's break this, let's go and put it in writing. We argue as hard as we can for a ruling, and if SARS says yes, good, we have certainty. If SARS says no, well, then you know, right? Then you know there's no debate about it. I mean, we did one for a trust recently where there are over 2,000 beneficiaries. Can you imagine if we had just issued an opinion and one of the 2,000 or 6 or 100 of them say, no, I disagree with the opinion? You know, how many opinions you're going to end up with at the end of the day? So I said, no, we've got too many stakeholders here. There's too much at stake for these stakeholders. Let's go and ask SARS, because it was a big issue. It was a very big issue that has a very, very big financial implication for this trust, the answer to this question that we had to ask. And I said, well, this is not something that we're going to do in a whim. This is something that we need to go and get clarity from, because if it goes south, there's going to be people who's going to say, no, that's not right. SARS is wrong because of this, that, and the other thing. And if it goes the other way around, you again have issues. So let's just go, and we got a ruling from SARS. And we argued, look, obviously when I go for a ruling, I argue for the best outcome for the taxpayer, and I'll argue as best as we can. And that is crucial also when you apply for a ruling, is the quality of your ruling is going to depend on the veracity of your application, right? You have to convince them that your view is correct. Otherwise, you might find that they're not as inclined to rule in your favor. So you have to make them think. So it is, again, it's a very useful tool, and we're going to, in the next week's session, unless we're going to do a judgment, there's an SCA judgment out. Fascinating, although it's technically just a referral of a decision to refuse leave to appeal, it nevertheless engages interesting issues of substantive tax law. But we are also going to discuss a simple issue of whether you can claim as a deduction in terms of 24J interest you incurred on a debt used to settle equity shares, to settle redeemable preference shares, which, if you don't know, as a general rule, it's not deductible, right? It's the same as borrowing money to pay out a dividend. You can't claim the interest. And the question in that ruling was, can they? And I'll leave it on that cliffhanger, right? For us tax people, these things are cliffhangers. It's sad, but true. For those of you joining late, please feel free to, all these sessions are on the Unicus Tax YouTube channel, so if you missed it or you joined late, The full recorded session will be on YouTube, where you can access and listen to it there. And then I hope to see you, some of you, and all of you, in fact, again next week. If there are no further questions, I'll close the session. I'll give it a minute or two. Perfect. Thank you very much, everybody, for joining. We'll see you again next week, same time, same place. Thank you.